What's up, Bitcoin Bulletin fam? Get ready, because we've got a packed show with massive moves in the crypto world. First up, the iPhone is costing way less when you pay with Bitcoin, thanks to a mind-blowing study from CoinGecko. This is huge for understanding crypto's purchasing power. Then, we're diving deep into the wild ride of Bitcoin's volatility, exploring how those massive ETF inflows are clashing with long-term holder selling. Are ETFs really the stability we need? Next, get ready for the drama as $4.25 billion in Bitcoin and Ethereum options are set to expire, shaking up the entire market. This could mean serious price swings. And finally, hold onto your hats, because a legendary Bitcoin whale, dormant for nearly 13 years, has just woken up and moved millions in BTC. You don't want to miss this. Hit that like, subscribe, and ring the bell so you don't miss a single update. iPhone costs 50% less when bought with Bitcoin, study reveals. Get this, your next iPhone could practically be half price if you're paying with Bitcoin. New research out from CoinGecko is showing something truly remarkable about the purchasing power of cryptocurrency. We're talking about the latest iPhone 17, and a deep dive into its pricing reveals that compared to last year's iPhone 16, it's costing significantly less in Bitcoin terms. Even though Apple kept the dollar price the same at $799, the amount of Bitcoin needed has nearly halved, dropping from 0.014 BTC for the iPhone 16 to just 0.0072 BTC for the iPhone 17. This is happening even as Bitcoin's own value has almost doubled. This isn't just a blip. CoinGecko's decade-long analysis, tracking iPhone prices in Bitcoin and Ethereum, shows a dramatic shift. Back in 2011, an iPhone 4S cost a staggering 162.25 BTC. Now, the iPhone 17 costs less than a hundredth of that. The study highlights how the incredible surge in Bitcoin's value has fundamentally repositioned its purchasing power. While the dollar price of iPhones has only increased about 23% over the last decade, the Bitcoin price required to buy one has plummeted by nearly 100%. The same trend is seen with Ethereum, with the iPhone 17 costing 44.9% less ETH than the iPhone 16. This incredible development is sparking massive discussion online. Crypto enthusiasts are celebrating this as concrete proof of Bitcoin's growing strength, while others are analyzing the long-term implications for consumer spending and the adoption of digital assets. It's clear that the days of crypto being a niche payment method are fading fast, with tangible benefits like this emerging for everyday purchases. And this massive shift in purchasing power is just the beginning of our crypto deep dive today. Stick around because we're about to unravel the intricate dance between Bitcoin's volatility and the game-changing role of ETFs. Navigating Bitcoin's volatility, the role of ETFs and long-term holder selling. Bitcoin's market is in a serious tug-of-war right now, and it's all about the push and pull between long-term holders cashing out and the massive influx of institutional money via ETFs. We're seeing significant selling pressure from those who have held Bitcoin for years, which is naturally cranking up the market's volatility and causing some sharp price dips. But here's where it gets interesting. These new spot Bitcoin ETFs are absorbing a huge amount of that selling pressure, with US ETFs alone seeing over $14.8 billion in net inflows this year. The dynamic is complex. On one hand, the ETFs provide a crucial safety net, allowing institutional investors to gain exposure without directly impacting the spot market as much. This has historically helped stabilize prices after major events like halvings. However, this reliance on a few major ETF issuers introduces its own set of risks. If these institutions decide to pull back or shift their strategies, we could see sudden liquidity gaps and sharp declines. Plus, the premiums and discounts on ETFs can create price distortions that add another layer of complexity. For everyday investors navigating this choppy water, strategies like diversifying your crypto holdings, employing dollar-cost averaging, and maintaining regulatory compliance are becoming more critical than ever. Using crypto payment platforms for stablecoin transactions can also help mitigate day-to-day volatility risks. The key takeaway is that while Bitcoin's price swings are intense, strategic management and a focus on security can help you weather the storm and even capitalize on the opportunities emerging from this evolving landscape. But the market's movements aren't just driven by long-term holders and ETFs. A massive event is on the horizon that could send shockwaves through crypto, a colossal options expiry. We've got the details next. Navigating the crypto landscape, opportunities amid Bitcoin options expiry. Get ready for a massive shakeup in the crypto markets, because today marks the simultaneous expiry of a staggering $4.25 billion in Bitcoin and Ethereum options. This isn't just another day. It's a pivotal moment that can significantly boost market volatility and, crucially, create unique opportunities, especially for forward-thinking companies in the burgeoning digital asset hub of the UAE. When these options contracts, which give the right to buy or sell at a set price, expire, they trigger a complex unwinding and rebalancing of hedges by major players, potentially leading to substantial price swings. This simultaneous expiry of both Bitcoin and Ethereum options means traders will be frantically adjusting their positions, turning the market into a potential roller coaster. For crypto firms, however, this increased activity translates into a goldmine of opportunity. They can leverage the heightened liquidity to execute trades more efficiently and potentially see the creation of new derivatives and structured products designed to cater to clients anticipating these expiry-driven market moves. The UAE's proactive regulatory reforms, positioning places like Dubai as global digital asset hubs, provide a perfect environment for these companies to innovate and attract capital. Beyond the trading floor, this volatility impacts how businesses operate. Startups, particularly in Asia, are increasingly turning to crypto payroll strategies using stablecoins like USDC and USDT. This approach helps mitigate the risks associated with Bitcoin's wild price fluctuations, ensuring employees receive stable value regardless of market conditions. As regions like Singapore and Hong Kong gain regulatory clarity, these crypto payroll solutions become even more attractive, offering a competitive edge and promoting financial inclusion. Ultimately, navigating these turbulent times requires robust risk management, including portfolio diversification and clear trading rules, to turn potential chaos into tangible opportunities. Speaking of big moves in the market, we've got a story that's truly making waves. A legendary Bitcoin whale has just resurfaced after 13 years in the deep end. Bitcoin Whale Awakens After Nearly 13 years. Why now? Prepare yourselves, because a true legend of the Bitcoin world has just emerged from the shadows. A massive Bitcoin whale, who acquired over 444 BTC back in 2012, when it was trading for just over $12 a coin, has just moved a significant portion of their holdings after nearly 13 years of dormancy. We're talking about a wallet that's been silent for over a decade, suddenly becoming active and transacting nearly $16 million worth of Bitcoin. This isn't just any old transaction. It's a move that's sending ripples through the market and sparking intense speculation about the why now. This awakening follows a pattern of other long-term, large crypto investors cashing out or reallocating their assets. Just recently, another whale dumped over 80,000 BTC after 14 years. Early adopters and whales like these are considered some of the sharpest operators in the space, and experts like Doug Calkett, CEO of Crocodile Labs, emphasize that these moves are never random. They indicate either a perceived opportunity or a significant risk. Jeff Dorman, CIO of Arca, suggests a possible link to the growing trend of corporate treasuries building Bitcoin reserves, with these early whales potentially being asked to contribute in kind to these newly formed digital asset treasuries. The market reaction to a whale waking up is often a mix of anticipation and caution. While many transfers never even hit exchanges, the mere fear of potential selling pressure can spook traders, leading to front-running and market movements. Despite this, Bitcoin's price remains robust, trading near $115,000 and showing optimism for the future, with many expecting it to stay above $105,000 throughout September. This dramatic reemergence of a long-dormant whale is a powerful reminder of Bitcoin's enduring history and the potential for significant capital movements within the ecosystem. And that, folks, is just a taste of the incredible stories we've covered today on Bitcoin Bulletin. And that's a wrap on another explosive Bitcoin Bulletin. We saw the iPhone costing half the Bitcoin ETFs facing off against long-term holder selling, a massive $4.25 billion in options expiring, and a 13-year dormant whale making a huge move. Don't miss out on any of the action. Smash that like button, subscribe to the channel, hit the notification bell, leave a comment below with your thoughts, and follow us on all our social channels for more crypto insights.